You can get a copy of my free ebook, Technical Analysis Basics. There is a link in the description box down below. So maybe you're new to technical analysis or you've been using it a while. There's a series of articles in this book that'll get you using some more technical analysis tools pretty much right away. It's written for beginners to intermediate, super easy to use. Hello everybody, this is Lara from pureelliottwave.com. I'm continuing on that list of markets that you voted on for me to give you free analysis of. Next up is Stellar. This is one I purchased and I'm looking at possibly purchasing a little bit more, but maybe not quite yet, and I'll show you why when I get to the end of this video. I'm going to do Elliott Wave analysis and then classic technical analysis on Stellar, starting monthly, weekly charts, then we'll work through updating the daily chart together. At the monthly chart level, I'm now using crypto compare data, and it's got these weird little dojis back in January and February, May. Oh god, this is so weird. I think the beginning of their data is quite buggy. This is the second market I've had some problems with. But I previously did my analysis with Yahoo Finance data and that was fine. I've imported my analysis from that data to this, and I had a first wave impulse over up here. I've labelled it cycle wave 1. A second wave zigzag over down here, which lasted 26 months. That was labelled cycle 2. So cycle 1 lasts 1 year. Cycle 2 just over 2 years. That's absolutely fine. Primary wave 1's lasted now 14 months and primary 2 over in 18 months. And so primary wave 1 has lasted a little bit longer than cycle wave 1. That's absolutely fine. These guidelines as to how long waves should last they are a guideline and they have to be approached with flexibility. And the reason why is there's a concept in Elliott Wave called extensions. Third waves very commonly extend, and when a third wave extends, it does so in both price and time, and so it goes from looking like a squished up accordion to a stretched out accordion. If you can have that visual picture in your head, when you stretch out the accordion, you see the folds within the accordion. Those are like the subdivisions or the Elliott waves within the wave that's extending, and now they can take up a little bit longer than previous waves of a higher degree. This correction here began from May 2021 and so far it's reached November, December 2022. It has lasted 18 months. This correction here was longer. It lasted 26 months. This wave up here lasted 14 months. It was longer lasting than this first wave up here, which lasted about 12. This is the assumption that crypto compare data, my starting point, is correct, okay? If that assumption is wrong, then this needs to be rethought through. But this upward wave has lasted longer than this wave, and this one very obviously has come afterward. So it could be that cycle wave 3 is going to extend, which we should expect because third waves within cryptocurrencies almost always do extend. So we should expect cycle 3 to take longer than cycle 1, and the primary degree corrections within it should look bigger than the primary degree corrections within cycle 1 because the accordion is being stretched out at this point. I hope that makes sense. I hope that gives you a really good visual idea of that concept of Elliott Wave extensions. I've labelled primary 1 an impulse. It fits at lower time frames. I'm labelling primary 2. I'm just going to delete this because I've reanalyzed that at a lower time frame. And I'm going to label it as single zigzag. So far, it's really, really deep. It's a 93 or 0.93 length, 93% of primary wave 1. It's really common for cryptocurrencies to exhibit very deep second wave corrections. So this is absolutely normal. It's on the deeper side of normal, but absolutely normal. No problem at all. Now, here's a technical principle. I'm going to grab a couple of lines here. So we've got resistance about here, we've got support, final support maybe more like here. So we've got final support about 0.045 and final resistance probably up here somewhere on this high about 0.80 to 0.90. Price has been within this consolidation zone from resistance to support, resistance coming toward support again for a long time since it entered this zone back in November 2017. The longer price stays within a consolidation zone or a zone delineated by resistance and support, the longer it's in there, the longer and stronger the eventual breakout is going to be. There is an overall bullish bias to this market. I expect it's extremely likely the breakout will be upward, and so eventually if we do get an upward breakout, I would expect it to be the start of a long, strong, bullish run. Now, because I'm not 100% confident the breakout will be upward, because you can never be 100% confident with anything to do with markets. We are dealing with a balance of probabilities, not certainties. I will acknowledge there is a possible for a downward breakout, and so I will manage my risk by only investing what I am fully prepared to lose in its entirety. If the amount I'm investing would cause me sleepless nights or damage my relationships with anyone in my family, then I need to reduce the amount of money I am investing until that is no longer the case. That's a really important risk management concept for long-term investing that too many people ignore. Risk management, boring, often overlooked, most important aspect. Okay, let's get along to a weekly chart. I'm going to have a look at the structure of primary wave 2. Looks like a single zigzag, just spent a little bit of time doing this. Leading contracting diagonal for intermediate A. This fits all Elliott Wave rules. I've checked the wavelengths and the trend lines are converging. Doesn't have an overshoot for the final fifth wave, but the final fifth wave did end slightly below the third wave. It's avoided a truncation. The fifth wave of a diagonal may not be truncated. Intermediate B, a double zigzag, and intermediate C, 1 2 1 2 1 2 3 4 3 4 3 4 5, an almost complete impulse. So the question is minor wave 5 over? Now before we answer that question, we need to put a channel around this bear market. Let's use Elliott's first technique for a correction. The first trend line from the start of A to the end of B, pull a parallel copy down to the end of A. Yes, that is a really good trend channel. That contains all of this bear market with the exception of a tiny overshoot for a third wave. That's fine. Third waves can have the power to overshoot channels, and it's a small overshoot. So I'm going to use this trend channel as my final confirmation that the bear market is over. When this trend channel is breached by a full daily candlestick above and not touching this trend line of upward movement, not just a little sideways doji. Here's an example of a doji here. There's another little one here. Not just a little sideways movement, a really small little sideways candlestick, a proper green candlestick. Then I will have confidence that this bear market for Stella is over and the next move up, the next bull run will be in its early stages. Let's have a look at how we want to have a look at minor wave 5 at the daily chart level. So first of all, I've just played with this idea of minor 4 as a triangle, and I want to show you why I'm not going to do that. So we're going from the low of minor 3, the week beginning 4th of September 2022, that low there is this low down here. I'm not going to worry about what's off to the left of the chart. I've checked up on those subdivisions and I'm happy with all of that part of the wave count. So let's have a look at this. Actually, before I take that off, the reason why, well, I mean, this is possible. So actually, maybe I should have this as an alternate. I'm not totally confident with this possible triangle for minor 4 because minute E falls quite a lot short of the AC trend line, although I have seen triangles do that sometimes. Minute D is just a little bit below the end of minute E. Now the rule for wave D of a contracting triangle is it may not move beyond the end of B, but the rule for D of a barrier triangle is it should end about the same level as B, so long as the BD trend line, this trend line here, looks essentially flat to the eye. This one looks mostly flat. This is an area of subjectivity, and this is unfortunately the only Elliott Wave rule which involves a degree of subjectivity. So you have to make a judgment about that. I think it looks essentially flat, so it could be. So I think we should have this. I'm going to label this an alternate and consider the possibility that a low is down here. I can see a strong bullish piercing pattern here, so that's possible. But I'm going to create my main daily wave count, and I'm going to have a look at what if minor wave 4 was over as probably a zigzag, and what if minor wave 5 is incomplete? So I'm going to drag intermediate 2 over here because it looks like there might be a triangle unfolding here, and that would be a 4th wave position. And so what if, okay, well there's, oh okay, no, this is possible. So we could have had, nope, I think we could have had 1, time consuming 2, 3, really quick 4, and now minute 4 could be a sideways moving triangle that's incomplete. So A, B, C coming down for D, got to come up for E, and then to finish. So let's get some labels on this possible triangle. Yeah, like that. So remember that rule for a barrier triangle, wave D of a barrier triangle should end about the same level as B. Involve that area of subjectivity, it could end like somewhere like here possibly. And in fact, that might be where it would end, because then the BD trend line would sit across these low, including the low of this candlestick. Triangle trend lines for Elliott Wave triangles are normally strictly adhered to. So once you know once you can have reasonable confidence it's a triangle, you can draw the trend lines, and then you can look for a pretty obvious breakout. And then the E wave usually ends short of the AC trend line. So maybe another week or so of sideways movement, and then a short, sharp downward thrust to one final low. Now there is a gross disproportion here between minuet 4, which lasted about a day, and minuet 2, which lasted a lot longer, 23 days. I don't have too much of a problem with that. I've learned the hard way with cryptocurrencies that they exhibit a tendency normally seen in commodities, but to an even more extreme degree in cryptocurrencies, a tendency for strong fifth waves. There's a strong fifth wave within minuet 3, and minuet 5, this green fifth wave, this red candlestick, is a really strong downward movement. The strength of those fifth waves causes the fourth wave that comes just before to be more brief and shallow than it would otherwise be. So more brief and shallow than its counterpart second wave. And it can give an impulse for a cryptocurrency and a commodity a rather three-wave look. So you have to be alert for that tendency for these particular markets. I've learned that the hard way with gold. I've been analysing that on a daily or weekly basis for over a decade now, and I've been analysing a lot of cryptocurrencies since about 2015, 2016. So that's quite a long time now, so I'm quite used to that. I think this is probably the most likely scenario for Stellar. A fifth wave out of a triangle is commonly relatively short. This one's not going to be limited because minute 3 is a little bit longer than minute 1. This final fifth wave will not be limited, with the exception of the invalidation point. Primary wave 2 may not move beyond the start of primary 1 below 0.0265. I'm going to expect a slight new low, but not by very much. And then when that's happened, I'll look for a reversal. When we get to classic technical analysis, which I'm going to go through now, I'm going to tell you what I'm going to be looking for. So here we have a strong downward week beginning 6th of November 2022. And now we've just got some sideways movement. I am not seeing some real strength off lows, so I'm going to pull that down here. I don't think primary 2 is quite done yet. There is no bullish candlestick reversal pattern at these lows, but look at this huge bearish engulfing pattern for the week beginning 16th of May 2021. So unsurprising that we got a lot of downward movement. There was another one back here, and these three also an evening star almost. So after this candlestick reversal pattern, we get into the bear market, and I don't see strength off lows yet. Let's look at volume. What's volume doing? No, volume is overall declining as the bear market continues lower. Pretty normal behavior. A little bit of a push from volume on that last strong downward week, and now price is essentially moving sideways with these red candlesticks, and volume is light. On balance, volume is not is showing some bullish divergence from this low back here, close 0.2773. Down here, the close 0.08. Price is closing a lot lower, but on balance volume is a lot higher. That's been the case for a while though, so it doesn't mean that this bear market has to end now. It could continue. let's grab some trend lines for on-balance volume. This is how I prefer to use it. If on-balance volume breaks above resistance or below support, that would give us a breakout from on-balance volume, which would give us a bullish or bearish signal. So I would look at that one in coming weeks for on-balance volume. Particularly if we make a slight new low, if on-balance volume just comes down to the support line, that may halt a fall in price. That may assist us to try and indicate where that low may, where or when the low may be found. ADX currently tells us at the weekly chart level, yes, there is a downward trend. No, it is not extreme. There's quite a ways to go before it gets there. Probably a little bit of bullish divergence developing here between price and RSI. I would almost consider this possibly a last pivot low. RSI is not as low as it was back here, but it didn't reach oversold at the weekly chart level in this bear market, so it could still continue lower, price that is, until RSI does reach oversold. Some bullish divergence between price and money flow index developing, that could develop further. ATR declining, that's normal behaviour. Stochastics entering oversold. Let's look at the daily chart real quick. At the daily chart level, there's this bullish piercing pattern for the 10th of November, but it does not have support from volume. Volume was lighter on that session, so we cannot have confidence in it. For a cryptocurrency, however, that's not really a deal breaker. Sometimes previous sustained lows, if you study them carefully, you'll see a bullish candlesticks pattern there, but it didn't have support from volume, and yet those lows can be sustained for years, and have been in many of these markets. So I've learned the hard way that's not a deal breaker. But this movement here, lacking direction, lacking volume, there's no follow on after that piercing pattern. So this looks like a consolidation and could actually be a pennant pattern, which is a variation of an Elliott Wave triangle essentially. Within it though, we have some upward sessions that do have push from volume. So within this sideways movement, it is upward sessions which have strongest volume. We've seen that previously though here within this bear market for Stellar, and yet price continued on lower. So that also is not definitive, not enough to tell me there is a sustainable low. At the daily chart level, on balance volume is moving slightly higher overall as price is overall moving sideways. So that's slightly bullish, not enough to indicate a sustainable low though. The previous downward trend reached very extreme. ADX tells us at the daily chart level there's no clear trend. RSI reached oversold at the daily chart level, but is there bullish divergence? No bullish divergence yet between price and RSI, so I'll be looking for a short, sharp downward thrust to new lows from Stellar, and if that happens, I'll be looking for some bullish divergence between price and RSI. If I see that, I'll be alerted to the possibility of a sustainable low being in place. It's not there yet, though, I think. There's a bit of bullishness between price and money flow index. I think I'd rather wait to see that on RSI. Money flow can be a little bit more sensitive. An ATR moving lower as price moves sideways, absolutely normal behaviour, and stochastics neutral. So this is my conclusion. This is my Elliott Wave count, my preferred Elliott Wave count for Stellar. I think we're going to see a little bit of sideways movement for another week or two, a short, sharp downward thrust, which could be over within a week, and then I'll be looking for evidence of a sustainable low and a buying opportunity for this one. Thank you so much for your support, and if you haven't already downloaded my free technical analysis book, the link is in the description box down below. It's free and it's kind of handy, particularly if you're new to technical analysis. Thank you so much.